What's going on, everyone? I hope everyone had an amazing day. As you can see, the NASDAQ is continuing its upward onslaught. It doesn't look like there's a reason for it to stop, and it doesn't look like there's an end to this rally in sight. Is the NASDAQ going to start going parabolic? Let's find out in the next few days. Anyway, there's a few things to cover in today's video. We're going to go over the 30-year bond. We're going to go over the 10-year yield. We're going to go over the rest of the indices. We're going to go over the crypto markets, crude oil, as well as all of the other stocks that you guys wanted me to do technical analysis on. All right, so without further ado, let's get right into it. And also, before I forget, make sure to subscribe to the channel and put on your bell notifications. That's all I ask. If you guys enjoy the content that I'm putting out, please subscribe. So yeah, thank you so much. And without further ado, let's get right into it. So as you can see, the SPY maintained above this uptrend, or maintained above this resistance line, right? And we were saying that if it can remain above this line and start to consolidate a bit, that would mean that it can continue on much higher. So there's not much else really to regurgitate on the SPY. As long as we trade above this level, it is bullish. And if we don't trade above this level, then we can still remain bullish, honestly, but we just have to remain above 427.65 to stay above this level. And other than that, you know, the MACD does seem a bit overbought now, but as we can see in the past here, the MACD line was at 838, and currently the MACD is at 402. So we know that the MACD can go on much, much higher, which means that the SPY's price can continue on much, much higher in conjunction. Okay, so there's really not much else to talk about on the SPY. It looks like we just have to consolidate above this level and start trading above it, similar to what happened over here. We broke this level. Very, very important, very, very important level of resistance all throughout the coronavirus and since this bear market. But once we broke above, consolidated, this gave us a lot of steam to continue on higher. And as we can see, the MACD, the MACD was at 8 at this point, and we were trading outside of the upper level of the B band. So that was a very, very bullish time. So will we recreate a time like this now? I mean, we have to wait and see. But I want to talk about the other indices a bit more in detail. So that was that for the SPY. Now I want to quickly talk about the IWM, which is the Russell 2000. First of all, we had a red day on the Russell. 228.77 held as support 2 days in a row to the exact cent. Okay, so that's going to continue being support. And then 228.08 is obviously the larger level of support to the downside. The MACD looks extremely weak, and that means that there is potentially a lot more room to go down on the IWM, okay? And if the tech sector continues showing strength, if the 30-year yield and the dollar continue to show strength, and the 10-year yield continue to show weakness, then the IWM will continue to show weakness. So that's really that on the IWM. The level of resistance is for tomorrow is going to be 230.70. And yeah, that's really it. So now I want to talk about the Qs, the 30-year bond, the 10-year bond, and the dollar. Okay, so let's start with the NASDAQ. First of all, as we can see, the NASDAQ is skyrocketing. Okay, it didn't trade outside of the upper level of the B band, which is a very, very bullish sign because it means that the we didn't hit an extreme level to the upside. We didn't trade one standard deviation away from the median point, which is a very good sign, especially if we want to continue rallying higher. So you can see that the B band is pointing upward in a pretty sharp way. This level will continue rising every single day. And as long as the Qs continue rising in this manner, we would need to really, really overshoot, I think, to start trading outside of the upper level of the B band. So that doesn't seem to be, it seems to be out of the question for now. We could also see that the RSI is very overbought, so that is something to consider, right? But the reason why we are trading in such an extreme way right now is because the 30-year bond is doing so well. So the 30-year yield and the dollar are both doing very, very well. Okay, so so the potential strength on the NASDAQ is dependent on the 30-year yield continuing to go up and the dollar continuing to go up. The macroeconomic landscape is changing. Whereas before, if the dollar was going up, then the entire market was going down. Okay? But the fact that there is so much movement going on in the bond market as well, in conjunction with the dollar, that is a very good sign for the NASDAQ and a very bad sign for the Russell 2000. Okay? So, to see how much higher the NASDAQ is going to go, we have to monitor and do technical analysis on the 30-year yield and then on the dollar. Okay? So, the 30-year yield clearly looks very, very bullish. This is a bull flag. We broke out of the bull flag. We even hit the upward target on the bull flag. And we consolidated above the upper level of the flag on the bonds. Okay, we can see that it consolidated above here. We bounced up even higher. One of the scariest things to look at is the MACD is very, very oversold. So again, when we are very oversold and we are in an extremely bearish pattern, that means that there is potentially much more room to the upside. And if there is much more room to the upside, then there's potentially a lot more room left to go on the Qs. Okay? So the 30-year yield looks very, very bullish. All right? Now let's look at the dollar. The dollar, clearly, this is a bull flag. A break of this level is ridiculously bullish as well. We're not even at the overbought level on the RSI. And the MACD is oversold as well. Okay? So the MACD is oversold on both the dollar and the 30-year yield, which is absolutely bonkers and ridiculous. Because it means that if they both continue on higher, then the NASDAQ, this is just going to continue flying. So, yeah, the 30-year yield, super bullish. The dollar, ridiculously bullish. It obviously consolidated at 91.6. You know, we traded around these levels. We bounced around a bit. And we look like we're going to be retesting 92.415 very soon. Okay? On the dollar. The 10-year yield had a red day today. So, the 10-year yield... So, I mean, look. So, back in the day when, a few months ago when people were looking at the 10-year yield, when the 10-year yield was going up, the NASDAQ was going down. Okay? And then it became, somewhat irrelevant recently. But now, because the 10-year yield had a red day, the IWM also had a red day. And the NASDAQ had a green day. Okay? So, literally all you need to understand are these few things. If the 30-year yield, look, just pause this video, rewatch it a few times. If the 30-year yield has a green day and the dollar has a green day, then the NASDAQ should have a green day as well. If the dollar and the 10-year yield have green days, then the NASDAQ should have a red day and the 30-year yield should have a red day. And that is the pattern that has been happening. And it looks like, unless we're proven otherwise, we just have to monitor it. So currently that's what's going on. That's what's happening with the bonds and the dollar and with the NASDAQ. Okay? I hope I did a good job explaining it. Go ahead and rewatch the video from the beginning if you're still confused, or just send me a message. And I will probably link you to the video. But yeah, no, I hope I did a good job explaining it. So, like I said, the 30-year yield doesn't look like it's stopping anytime soon. The dollar, when you look at things zoomed out, it still has a long way to go. So, the NASDAQ can potentially continue on for God knows how long. until there are extreme levels, and we really get overextended. Until then, there's no real reason to go short the NASDAQ heavily. Okay, there's that. The 10-year yield. One other thing that I want to look at on the 10-year yield is the MACD is extremely bearish. It's overbought, and we are continuing to go lower, and it means that there's much more room potentially to go to the downside. So the MACD on the 10-year yield and the IWM look very similar, which is the reason why, you know, they're somewhat moving in conjunction. Okay, so you can see that the MACD is overbought. It's pointing downward. Looks like there's still more room to go to the downside on the 10-year. And then on the IWM, same thing, right? Overbought. Looks like there's more room to go to the downside on the IWM. Okay, there's that for the overall market. Oh, sorry. Let's go over crude oil as well. Crude oil, you know, it's a good sign. It had a good reversal today. It didn't fall too heavily. It looks like, I mean, honestly, as long as crude oil stays up, then the overall market is going to continue staying up, and it won't be a huge recession or like a bear market. So if crude oil continues to do well, the overall market is going to sustain itself. So that looks like what's going on right now. So cool, yeah. Crude oil is doing well. So there's that for the overall market. Now I want to talk about Bitcoin and the crypto markets. So as we can see, Bitcoin finally broke above this level of resistance, and now it needs to remain above. So it needs to sustain itself above 35,600 for today, okay? Tomorrow, we need to remain above 35,768. If we can do that, then this will give enough steam to potentially cross up and retest this blue trend line here, which you can see has been acting as support prior and is now acting as resistance. So these two blue trend lines here are very important on Bitcoin, and especially this green one right down the middle. It was acting as support since November 27th. But then when you look at it on the log chart, this same trend line gave a signal for capitulation to the downside. This was at 41,255. A break of this support basically signaled, you know, the capitulation to the downside all the way to 30. So now when you look at it on the non-log chart, we just crossed above it. So that's why Bitcoin, this was a very bearish move. Oh, sorry, this was a very bullish move on Bitcoin. Okay, so yeah, so tomorrow that level needs to hold 35,700. Okay, and now we can look at Ethereum. Obviously, the other altcoins are continuing to do well, especially since Bitcoin is doing well. The next level of resistance, obviously on Ethereum, are these two key levels here at 2316 and 2341. We can also see Litecoin continuing to, you know, move upward. XLM, you know, obviously all of the rest of the overall crypto markets continuing to do well. And yeah, in the past, you could also remember that if the dollar did well, then the crypto markets would not be doing well. But because of the bond movement and the overall longer term outlook of the economy, as well as inflation, all of those things tied in, it is starting to become a bit more irrelevant to the downside. So if the dollar goes up, it doesn't necessarily mean that the rest of the market is going to go down. Okay? A bit of a mouthful, but I think I did a much better job today of explaining everything, and I didn't ramble as much. So yeah, there's my analysis on the overall market. So now we can go into the stocks that you guys wanted me to do technical analysis on. URNM, obviously it's a mining stock, and with gold and silver not doing well, obviously URNM also is not going to be doing well. It has very important support at 60.65, and we can see that currently it's created a bear flag, which is a very bearish pattern. So a break of this bear flag can signal, you know, potentially a move all the way back down to $54. And especially because the MACD is still overbought, that means that there is a lot more potential room to go to the downside on URNM. Yeah, if we cross below 60.65, buying puts might actually be a pretty good idea on URNM. NEO, we can see that it's bouncing up into like highs. It's been consistently going up, and it has some resistance at around 51.50. The MACD still, very, very bullish. It just crossed above today, yet NEO continues to go up. So that is a very, very bullish sign on NEO, because if the MACD can continue on higher, that means that NEO will continue on higher as well. And that means there's a very high chance that NEO can break above 51.50 in the short term. The only thing worth noting on NEO is that we are trading outside of the upper level of the B band. But you can look in the past, we do have a history of trading outside of the upper level of the B band for quite some time before we ever even dip down below. Okay, so 51.50 looks like a very doable target on NEO, looks very, very bullish in general. LKCO. So LKCO, we did analysis on this before. It was in this very extreme uptrend. We broke out of it, obviously, but now it's consolidating above 246, which is very, very important support. And it's still in this overall uptrend here. So 246 tomorrow is basically like an intersection point for this uptrend as well as the support. So overall, LKCO looks very bullish as well. Even if it crosses below 246, the fact that it maintained this bullish structure, like from being extremely overbought on the RSI, so it's cool. So essentially, it's cooling off from the overbought levels on the RSI as well as the MACD, staying above the level of support, and now it's oversold on the MACD, which is a very, very bullish sign. So if we can consolidate a bit more here above 246, the MACD line can continue falling a bit more as well. And that would mean that there's even more room to go to the upside on the MACD. By that time, the RSI might fall a bit more as well. And then, both of those things can fuel a much higher target on LKCO. And then we can end up breaking 276 again and then retest $3. So LKCO in general looks very, very bullish as well. Shopify. Shopify is ridiculously bullish. Like, that is crazy what's going on with Shopify. This is honestly ridiculous. So it has very important level of support at 1471. The RSI has been oversold or overbought for weeks, right? And we cooled off out of the overbought on the RSI, remained above support. We were overbought on the MACD as well. We cooled off on the MACD, and now we're oversold. Literally above support. So all of those things are very, very bullish on Shopify. Overall, Shopify looks extremely bullish. So, I mean, in the short term, the level of support that needs to hold is 1471. And then, the key level of support afterward is going to be 1429. But overall, this looks very, very bullish. We can dip down back to 1400, give people another chance to reload, but this looks very bullish. We're not trading outside of the upper level of the B band, which is another good sign. Whereas over here, when we were this bullish before, we were trading outside of the upper level the entire time, which is why, we ended up getting tired, exhausted, the price action, and that's why we fell. But this time, it looks like we're consolidating a bit better here, which is, very, very important. So it's essentially, in the past move, if we were consolidating above 1433, above this level here, we would be able to continue on higher. But because we weren't able to consolidate back here, that's why we fell. So this time we are consolidating. So we just need to continue to see what happens on Shopify. Overall, I think it's very bullish. And of course, Amazon, because the rest of the tech sector was bullish, Amazon is also bullish. This looks like a bull flag, which is a very bullish pattern. the RSI, the MACD on Amazon is very, very oversold, which is another very good sign. It looks exactly like the MACD on the bonds. So that is a very, very good sign. It means that Amazon has a lot more room to go to the upside. The important level of resistance is going to be this high here at 355.54. The level of support is obviously going to be Monday's low at 33.94. So if 33.94 can continue to hold, that means that Amazon can just continue on higher and break above this level of resistance. And yeah, but it all really depends on those three things that I was talking about before: the Qs, the 30-year bond, the 10-year yield, and the dollar. So 4 things. So yeah, if those things and those patterns persist, Amazon should continue to do well. So yeah, without further ado, wow, it's not really further ado, but I hope you guys enjoyed the video. If you guys like the content, please like, comment, subscribe, do all that good stuff. Yeah, have an amazing day. I'll see you guys tomorrow.